Okay, what is up, gang? So I wanted to make this video real quick for you guys. It's just an options 101 video, all the basics, real simple. I'll go over a couple options or a couple examples of options contracts at the end. But just in case you guys don't know, if you're in this group, you should probably already know. But just in case, I gotta put this out there. All right. So what is an option? An option is basically just a contract that gives the bearer the right, or the owner the right, not the obligation, to either buy or sell an amount of some underlying asset at a predetermined price at or before the contract expires. So basically, two types of options are really what you're going to work with, either a call option. So a call option, most options are going to be in the form of 100 shares, the right to buy 100 shares at the strike price on or before the expiration date. And I'll go over a couple examples with you guys at the end here to show you exactly what those things are. Like I said, this will be quick because this is pretty basic stuff. The put option, so this gives you the right to sell an asset, which is usually 100 shares, at the strike price on or before the expiration date. That's if you exercise the option. For my strategy, you will absolutely never be exercising an option. All right. The strike price is the price that you're able to buy or sell the asset at per the options contract. And the expiration date is the date at which you must use or exercise an option. Like I said, I never use or exercise the options. I'm just buying and selling the contracts. So it really doesn't matter. None of this matters when you buy or sell the contracts because you're never going to exercise it. You're never going to let it expire. All right, so quick two examples. I used Webull and Robinhood because that's what a lot of people use. But if you'll see, I have this Chewy $85 call. So that's the strike price right there. This means I have the right to buy 100 shares of Chewy anytime between now and December 18th at $85. Now, to have the current price, you see Chewy down here is $85.11. So it's only 11 cents higher, but you see it's worth $3.06. I got it for around 93 cents. So I'm up. So I would probably sell that contract pretty soon, depending on the charts next week. Same thing over here. You'll see SEDG. A little bit different here. You have the expiration date here. You have the cost that I paid for the options contract, the current price that the options contract worth, what SEDG would have to go to break even, and then the actual share price down here. If I wanted to exercise it, I could click exercise. Like I said, I'm never going to do that. I would just sell this contract and probably buy a higher strike price contract. So I told you this video is going to be quick, but just a quick overview of options, buying and selling calls, and puts. Very, very simple. All right. Hope this helps somebody out though.